Hey everyone, this is Zach with Palantir Research. Palantir is set to announce their first quarter earnings of 2023 on Monday, May 8th after market hours. These upcoming earnings are going to make or break this year of 2023 by setting the tone for the company. And I'll tell you why this is important for investors. Also, I'll go into the 4 metrics I'd like to see as an investor for initial gut checks of these earnings, so these won't be your obvious net incomes or revenue values since that's already a given. For real, it's nice to have, of course, with trying to get into the S&P 500, making it easier to hit that full year 2023 GAAP profitability, but it's not the end-all be-all to me, especially this quarter. First, why is this going to be important? Let's look at the macro environment first at a very high level. We've been going through this rising rate environment and one of the fastest in history, and it actually seems to be working to fight down inflation. Of course, there are pockets of areas, especially around housing, that are reluctant to fall, but given all the stimulus and rock bottom interest rates of the last few years before rates rising, the aggressive action of the Fed seems to be working, although it doesn't feel really nice. Now, determining if this is going to be a soft landing is very much up to debate, but nonetheless, last quarter we got the full year performance of 2022 and how Palantir was able to eke out a small GAAP profit with still declining growth in revenue. This is important to note because it appears they are shifting their priorities from growth to GAAP profitability to focus where they want to, of course, lower their expenses where they can. And remember, they had that $44 million step up, which helped them reach that GAAP profitability. This was actually seen on some Glassdoor reviews too, with those references to the cutting of expenses where employees were mentioning loss of perks. Stinks for them, honestly, but maybe you could have seen this coming with them becoming a public company and focusing on the GAAP profitability, but as an investor, I don't mind it. Now, why am I babbling about these past earnings and the macro environment? Well, for this upcoming earnings sentiment seems to be shifting where rate rises is not going to be expected at least later into the year, and possibly seeing rates stay where they are, or even more bullishly, if you want to think that, start to come down. Personally, I wouldn't expect any rate decreases very late this year or early in 2024, if anything. I lean towards the Fed being much slower to respond when it comes to inflation. And interest rates are really big for Palantir as a tech company, with future earnings and revenue cash flow being more heavily taken into account into their multiplier. This really affects their valuation, hence the movement of the stock, and we'd see them go to the moon but also crash down all the way to the 5s at one point, a lot of this being run by the macro environment. So what am I looking for this earnings, especially as a long-term investor, that's going to affect this sentiment? First, I want to note, I know people like to mock YouTube folks for being long-term investors, saying we only talk about diamond hands when we actually have paper ones. Well, if you're curious on my exact buy points, you can check out one of my earlier videos here for the details, but my average is 1307 on 5,000 shares. So I'm warning ahead, I'm not anywhere near selling anything unless something actually huge fundamentally changes with their business or the marketplace of their products. And that's of course for the downside. But on the positive side, of course, if we see really huge euphoric valuations again that projects out very, very aggressive growth rates, that's also another selling point. I don't see either of those scenarios playing out though in the near future. But big picture wise, I'm very happy to hold, especially for their government business. I'm going to go over the metrics that I feel are good leading indicators for longer term growth, which is better for their long-term shareholders if the business functions well. So first, I want to see their customer count keep growing, and if they can have the rate of growth grow too. Last earnings, they had a customer count all in the trailing 12-month or TTM months of 367, with the previous quarter Q3 at 337 and the previous Q2 at 304. You can see the growth rates for consecutive quarters, so quarter over quarter. So the rate of growth from Q1 to Q2 have fallen. Now, as they've acquired more customers, that kind of makes sense. We don't want to see that 8.9% though from Q3 to Q4 growth get much lower, especially when you have management making all these PR runs, but nothing to show for it. But if you're doing the traditional year-over-year comparison, of course, where you got like Q2 of one year versus Q2 of the previous year, we've got those huge growth rates of 80% down to 55%. This is expected to fall naturally, of course, since the base numbers will grow, but the longer they can extend this growth, the better. And even better, if they continue to provide the breakdown between commercial and government, the commercial side needs to see healthy growth. I have these noted here with marketing that the decline in rate, but we've seen some growth on the commercial side for recent quarters from 10% to 14% of consecutive quarter growth. Obviously, the year-over-year rates look really nice since those are higher than the overall customer count. You can obviously see that their commercial side is growing faster than government when looking at these customer counts. I hope this is a trend though to continue, especially when you have larger growth rates on a higher base number. That goes a long way if this can actually be sustained and kept from decreasing rapidly as much as possible. With customer count, I know as an investor these products are large investments, so I really can't expect revenue to fly up until we really see customers go through their pipeline of talking with them, doing a trial, and then eventually scaling up contracts as it spreads throughout their companies. It's really slow, but we've seen how these customers can mature into multi-year contracts in the tens of millions. Now, another metric I want to see with minimal decline or hopefully staying the same and growth is the net dollar retention, which for 2022 ended at 115%. Previously though, for 2022 Q3 and also Q2, it was 119%. Palantir really needs to outshine this kind of metric while the revenue is still relatively small to give confidence to investors that customers are sticking to their products and expanding. It has been on the decline unfortunately, but still above 100%, so any increase or hold in that rate here would be amazing in my opinion. And remember, this metric is based on current customers, so even if you have new customers, that shouldn't go into this evaluation. Next, this is kind of related to the customer count and also top revenue per customer metrics, but last time in Q4 2022, they mentioned how many deals they closed of at least $1 million, $5 million, and $10 million. We know they did 55 over $1 million, of which those 11 were at least 5 million and 5 were over 10 million. Of course, seeing the total dollars grow is great, but actually I want to see a larger proportion of deals above $1 million, but not necessarily above 5 and 10 thresholds. What that shows me is the conversion of trials to paying customers, and mixed with that over 100% net dollar retention, this shows there's a lot of growth in the pipeline for the next few years to come. Now, the most important metric, I've mentioned this a lot of times, but their operating cash flow. Yes, I know it's a typical metric that people look at. We know cash and debt-wise on their balance sheet, they're very healthy, but when it comes to cash, it is possible to manipulate, if you take it at face value, of course, with investing and finance cash flow, which is why I like operating cash flow. Obviously, with a DPO in the years past and the buying and selling of investments can move the overall cash balance, so I really like to hone in on this operationally. We've seen this downtrending the last few years where we still see positive, but only had 224 million of positive operational cash flow in 2022, coming down 32% from 334 million back in 2021. Like, yeah, they had some really good quarters of cash flow, but the most recent ones aren't necessarily trending in the right direction. I want to see this stabilize or grow. The only exception to this though, which is also a factor in that decline, is if they for some reason dramatically reduce stock-based compensation. And this ultimately reduces the cash flow, but that would be expected. For references, if you see the adjustments here from 2021 and 2022, the loss from operations, it is negative of course, but still significantly down from negative $411 million in 2021 to a $161 million loss in 2022. But as you can see, this is still being offset from that stock-based compensation of $778 million in 2021 and $564 million in 2022. So it is easier to see it when it's on the presentation, but if for some reason you don't believe me, it's also here on their official financials on the statement of cash flows on page 90 of the stock-based compensation line, adding back those dollars. They technically didn't spend from their cash pile, so of course it's going to show up on their cash flow statement, hence giving shares away and why you add it back on this financial report. So trending down though is a good step, and hopefully that continues. But if we see higher cash flow, it's important to check it's not growing at the expense of shareholders with stock-based compensation. That's the beauty of financial reporting and accounting. It needs to balance out where you can see why something is increasing or decreasing, like how people last quarter were looking for that GAAP profitability and looking at that $44 million step-up basis. But I like highlighting these high-level gut checks on a company because it gives a picture of what is coming down the pipeline or how they're doing with current customers, and then the overall health of the company. Of course, with cash flow, you can survive as long as that's positive. So more videos to come, especially when earnings come out, but put a comment below with your thoughts and I'll see you in the next video.